Yo, what is the dealio, man? Hey, listen, in this video, we're gonna be talking about dividends, all right? How to build out your dividend portfolio and just some little hacks and things to do. How to do it with $1,000, right? If you wanna start your dividend portfolio with $1,000, how to do that. And I'm gonna give you guys some tips and some tricks, all right? If you're just watching this video, be sure to like this video and subscribe to the channel, all right? We talk about trading, mindset, freedom, entrepreneurship, and investing as well. All right. So with that being said, I am a big fan of dividends, right? Dividend stocks. I trade, but I also take that money and I put it into dividend stocks, right? So a big thing when it comes to dividends is first off understanding what type of investor are you, okay? What type of investor are you? Now, when you have dividends, you could go, you got individual stocks that pay out dividends, and then you got ETFs, right? Now, companies pay out dividends because they're so big and they have so much profit that they're basically saying, hey, because you want to hold our stock and have ownership in our company, then we're going to pay you to be a shareholder consistently over time, all right? Some stocks have higher payouts than others, right? But there's certain things you want to think about that will allow you to have the most advantageous situation. And because you don't want to be getting dividends on a company, but the company missing dividend payments and stuff like that, right? So you want a solid company. And the next thing is you want to ask yourself, do I want to get dividends from an individual company, or do I want to get individual dividends from an ETF, right? If you aren't familiar with what the difference between an ETF and or index and a stock is basically this. Individual stock is one company, all right? It's only one company, but an ETF has a basket of companies, right? It's called holdings, right? So either index fund or ETF. So when you understand that, okay, you could get paid out a dividend from an individual stock, or you could get paid out a dividend from a ETF, right? So I like ETF dividends or dividend ETFs simply because they're a little bit safer, right? A lot of companies that pay out dividends are solid as well, but when we're looking at ETFs, these ETFs, they hold 100 companies, 300 companies, 200 companies, 500 companies. So that ETF is going to be a lot more diversified, which also means that the losses and the gains are going to be balanced out. But at the same time, it's not going to be growing 25, 50% in a year. It's going to be nice and steady over time, right? So you got to ask yourself, do I want to just have a dividend ETF, and then that dividend ETF is going to pay me out X amount of dollars per year, and I could build up my passive income from there? Or do I want to have individual stocks that pay me out dividends, and those stocks are going to appreciate in time as well, right? Now, when an individual stock drops, it's going to be hit a little bit harder as opposed to like ETF, okay? So this is things that you got to remember. Now, if you got $1,000, I'm going to give you 3 stocks, right? And these are going to be all dividend ETFs. I'm going to give you 3 dividend ETFs, and these 3 are what I have and what I started with when I was talking about investing into ETFs and dividend ETFs. Because for me, it only makes sense, right, to get paid out dividends, and then also that stock, that ETF is growing in value over time. Okay. Now, the first stock I'm gonna tell you is gonna be VTI, right? This is the first ETF that I started investing in. Now, VTI is basically, it has the top 3 sectors, right? Top consumer goods, and then finance, and then tech. So it holds those companies, the top companies in those sectors, inside of VTI, right? Now, VTI has a yield of 1.3%, right? And with that yield, they're paying out $3.75 per share, and the stock right now is at, as of today, the stock is at $291, right? So for every $291 right now that you get in, you're gonna get back $3.75 for that share. Okay, so that's VTI. The next stock is gonna be VOO. Now, VOO is basically Vanguard's version of the S&P 500. So it follows those 500 companies, right? Now, they have the same dividend yield at 1.3%, okay, in regards to a dividend yield, but they're going to be paying you out $1.81 per share. But as you can see right here, the stock is $544, right? So you're going to pay more, you're going to get less per share, right? But the reason is because it's potentially a little bit safer for you, because the ETF is a little bit more diversified, right? So that's going to be VOO. Now, the thing about VTI and VOO is, what I would say is, if you're going to do VTI and VOO, open a Vanguard account at Vanguard.com, because these are their own ETFs. What you can do is, if you only have $400, but this VOO is $544, you could put $400 in there and not get a full share, but you could work your way to having a full share. So however much money you have, you could put towards that actual stock. Now, you can't do this for individual stocks. You can only do this for the ETFs that are Vanguard's ETFs, right? So VTI and VOO, right? Get it inside of your Vanguard account, and then you could put, if it's $280 for a share of VTI and you got $100, you could go put $100 a month towards it right there, and you'll still be able to accrue your dividends from that. Now, VTI and VOO, they both pay out quarterly, okay? They both pay out quarterly. That's another thing. Do you want a stock that pays out monthly dividends or quarterly dividends, right? These two are going to pay out quarterly. Another thing that you want to make sure you do is, you want to make sure you turn on your automated reinvestment. So when that dividend gets paid out, it just gets reinvested and it buys more shares, or it invests more into that stock for you. And over time, it's going to compound, and you're going to be able to grow your money a lot faster on autopilot without you even having to think. Okay, so we got VTI and we got VOO. The last one that I'm going to say is going to be SCHD, okay? This is a Charles Schwab one, and it follows the Dow, right? 100, right? 100 companies. This the plants in the background, they getting water right now, so don't even worry about that, right? But we got SCHD, okay? Now, this stock is only $26. Now, I like SCHD because it is $26, right? Now, SCHD, it isn't going to be at no $60 anytime soon, right? But it is going to pay you a dividend, okay? That dividend that it's going to pay you is going to be a 3.94% yield, as opposed to the 1.3% that VTI and VOO have. And they're at $1.04 per share, okay? So I want you to think about this. So, yes, VTI is more expensive and they're paying more per share, but if you got $500, $1,000, you could put that amount, you could go start off, if you got $1,000, you could start off with about what, $25. If you get 10, that's $250. So you could get about 40 shares of SCHD, right? And then start your dividend journey with SCHD. And then as you continue to grow your money, you can start getting the VTI and then the VOO, and then whatever, other companies that you want to have over time that are paying out dividends. Okay? But when you're investing in stocks, you want to ask yourself, do I want to only focus on appreciation, right? Do I want to just get a stock that appreciates and that's it? That's in growth mode. We call those growth stocks, right? Growth stocks are stocks that aren't paying out a dividend because they're reinvesting their profits into the company for the growth. Or do I want to get stocks that are so established and they're so big that they're paying out a dividend as well? Okay, and it may grow in value, but it's not going to grow in value at the rate that the growth stocks are going to be growing. So you want to have a balance of that, right? But I really recommend having a brokerage account that's dedicated to dividends. I do. Okay, so you can have a growth stock brokerage account, and then you can have a dividend brokerage account. And this dividend brokerage account, you're only buying assets that are paying out solid dividends, solid companies that don't miss dividends, that their dividends grow every single year as well. If you do that over time, it is no question that at some point in time, you are going to be a multimillionaire. You could be making 50, 60, 70K every single year off of dividends alone, not including your retirement, what you're doing in your real life, what other investments you have, and things like that, right? But so if I had $1,000 with these three stocks right here, I would start out with SCHD, right? I would start out with SCHD because I would be able to get a good amount of shares. And the other thing is, when you buying your dividends, you want to know what the X date is. The X date is basically you gotta own the shares a day before the X date to be able to get your dividend payout. So sometimes you may buy the shares. Let's say today is what, May 16th. Let's say the X date was May 15th. If you bought, let's say you bought 1,000 shares of SCHD today, right? And the dividend, you would not be able to get the dividend payment for that quarter because you missed the X date. You got in after the X date. So make sure you look at the X date so you know when you need to have your shares in by, so that way you can get your actual dividend payout for that quarter. Okay, and SCHD, they pay quarterly as well, right? So if I had that $1,000, I would probably start with SCHD, and then I would get that Vanguard account, and then I would start to go into my VTI and then my VOO as well, right? And that's how I started. I started with VTI and VOO inside of my Vanguard account, and I just started putting in, $200, $300, $500 every couple weeks, right? And it just started to add up. So the interest is gonna grow because the stock was going up, and then also because I got in VTI and VOO pretty low, right? I got in the VTI in the 1s and VOO in the 4s, okay? But as you add to it, it's gonna obviously grow in interest, but then them dividends, the more shares that you start to accrue, you're gonna start getting paid based off of those dividends. I mean, based off of how much they pay per share, and then your money gonna be growing. And make sure you turn your drip on so that it automatically reinvests without you having to think about it, so that it could continue to grow and it could compound a lot faster. All right. So I got more dividend content on the way. Dividend content, stocks, investing, and obviously trading as well. All right. But I wanted to start it off with that right there. All right. So I hope that helped you. I hope that it planted a seed for you as well. All right. Like I always say, make sure you get up out of your head. Go get into this world, because your head is a dangerous place to live. All right. And also remember, the more you study, the less you worry. All right. I'm going to see you guys on the next video. Peace.